21.5k is probably one of the more important support levels currently on Bitcoin's macro chart. We're going to discuss how this particular level will facilitate a bounce or a continuation toward the downside, potentially as low as 19,200. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today, guys. 21.5k is such a significant level of support. And not only on the short term have we identified it as a significant level, but also now on the log scale, it is shown up on our diagonal resistance here as a potential support resistance flip of that bear market resistance on the macro log scale. We're going to discuss this more into today's video, but specifically talking about what this means for the price action. Can this result in a significant bounce past 25k? Or if we do break this level, how low can Bitcoin go? Before we get into it, guys, smash the like button, hit the comment button, subscribe to the channel. You'll get updates on all of our analysis, videos, information, news events, educational posts in our Telegram channel, which of course you can find in that second link down below. You can see it over here, and also join our VIP channel, guys. You can get access to all our trading signals for altcoins and Bitcoin, exclusive analysis and exclusive educational posts. You can find all of the membership details and track record here. Finally, sign up to Bitget, 15% off your trading fees, only with my link down below. Now, let's start off with the market data. So for the month, currently Bitcoin is down 5.76%. We saw a little bit of a jump in the last 24 hours from that 21.5k level, which we did expect of support. As you have known, if you've been watching the channel, we expected a breakout of the falling wedge, confirmation above 19.2k, which was that weekly POC, to a target of 22.6 to 24.3k, perfectly reached. At 22.6k, we said volume, momentum, volatility is decreasing. We are at resistance. The DXY is rising. We are massively likely to reject. It's an 80% chance upwards of rejection from this range. Our first target being 21.5k. This red box represented the local high resistance of our previous horizontal consolidation before that final leg upwards, which we perfectly met. Okay, so far, so forth, Bitcoin has done exactly as expected. But the whole point of today's video is to discuss why 21.5k is important, why you should pay attention to it, what it can mean for Bitcoin if we bounce, and of course, why would it be very, very bad if we lose this level. Now, let's start off with our market data. 5.76%, as we've said already, not looking amazing. We do have 24-hour volume down 50%. Again, the weekend does kick in, the volume does drop, engagement in crypto drops, everything kind of comes down on the weekend, not massively unexpected. Again, a lot of news coming out this week, particularly with CPI coming on the 14th, which we will be discussing closer to the date. You can see our liquidations are down 73% again, signifying. What does it signify, guys? You should know now, a drop in volatility, a drop in volume, okay? And compression, it signifies consolidation and compression. Now, this is no surprise. As we said like 3 days ago, before we even got to this level, we said we will see a surge in volatility, a surge in volume, and a surge in speed of price action if we lose 22.6k. We will see that continue until we reach 21.5, where we are met with higher historical trading volume. This is when we expect the price action to start to slow down and consolidate and compress. That is exactly what we're seeing. Remember, guys, one of the most powerful tools you can use when analyzing price action or expected price action is historical trading ranges, historical volume ranges. Look to see where those orders are placed and where those orders were placed historically to identify where the price is going to move through fast or find challenge to move through, essentially. Moving on, guys, to volatility. Again, we can see volatility is coming down. Nothing unexpected there. Liquidations in the last 24 hours, again, like we said, are down massively. We've had longs liquidate, we've had shorts liquidate. Again, a lot of people jumping into late shorts at 21.5k, expecting a continuation downwards, but they did not understand how support works. They were not paying attention to the historical ranges or the horizontal ranges on the charts. In fact, they jumped in expecting a continuation downwards and they got wrecked. So that is it for the market update. Let's go ahead and take a look at the broader markets. DXY is still in the same position as we said yesterday. If the DXY does push upwards here, very bearish on the markets. Expect 21.5k to be lost. Expect Bitcoin going downwards, potentially 19.2. If, however, this resistance range has not been broken out by the DXY, we will expect the DXY to fall, and the DXY will crash quite hard, expecting a move downwards to 102.5, which could give some breathing room for the markets over here, guys. We could see the markets rally a little bit. Moving on to the S&P 500 and Dow Jones. Dow Jones is still in the same position here. Horizontal consolidation in a symmetrical triangle formation. Higher lows and lower highs. We do expect a directional break to occur. A directional break being a daily candle close above the downward trending support, or should I say downward trending resistance and upward trending support. Whichever one of those occur will determine the directional move for the Dow Jones. So we are currently in a horizontal consolidation after a uptrend. Whether or not this uptrend will continue will be determined by the directional break. Looking for that directional break will result in a 35,000 target or a 36,600 target, or again breaking below 33,000 or 32,000. Let's go on to the S&P 500, guys, at support here. As you can see, represented by our local highs over here, again over here in early December. And as we can see, we broke through this level, retesting a rejection zone sitting around 4,200, only to now retest a massive area of support. Again, if we lose this level, it is likely the DXY has gone up and Bitcoin will lose 21.5k. The S&P 500 will most likely drop toward this uptrending support line, where it will have a second chance at finding support. Losing the support line would be catastrophic for the S&P 500 and most likely result in a continuation downwards. However, bouncing from either this current point here or this lower level here could potentially still result in a continuation upwards to retest 4,300. Let's go ahead and jump into Bitcoin now, guys, starting on that macro, then coming down to the short term, talking about the technicals and the probability of a bounce or crash. So as you can see in the larger time frame chart, on the weekly chart, Bitcoin has seen a retest of the downward trending resistance of the log scale. This, of course, is not bullish. This is not bearish. This is nothing right now. This doesn't mean anything. What it's showing us is a potential area of support, but more importantly, a potential flip in the overall log scale trend of Bitcoin. Currently, we were in a downtrend. We broke out of that downtrend into a reversal structure. That reversal structure has not developed into a macro uptrend yet. As you would know, we would need to see a break over a few points. The weekly 50 EMA sitting at 24,300. You can see the thick red line there, okay? The 200-day moving average on the weekly over here, represented by that yellow line. We'll also need to see a break over the $25,000 level, as well as the 24,300 level. Again, both of these two price points are represented by that 50 EMA and the 200 moving average. For a macro uptrend to initiate, we need to see a break over those two price points and two moving averages on the larger time frame. Okay, so what does this chart then tell us? Well, like I said prior, it tells us that we could potentially be seeing that play out, okay? It tells us a potential support or resistance is in play, signifying that this reversal has now gained that strength to flip this downtrend, and if the price action does bounce through and continue upwards, it would confirm that we are now out of that downward trending resistance, and therefore the uptrend is more likely to initiate and continue in that uptrend and not be a fake out. So a very important level to keep your eyes on, guys. If we do break back down below, it would signify a massive deviation from trend, and that could potentially take us all the way back down, and something to keep your eyes on. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So moving back to Bitcoin over here, as you can see, Bitcoin has rejected from that major resistance zone, again, a resistance zone that we've been talking about for quite some time now. There's no doubt we've been talking about that. We've been talking about for a very long time. In fact, we were one of the first people to say decreasing momentum, decreasing volume, decreasing velocity at this range all the way back in early, or should I say late January, talking about this. And then a lot of people jumped on board with that. But as you can see, guys, the price action has reached a higher area of historical trading volume, signifying it is at support. So why is it so important that 21.5k holds on the short term? And we'll talk about the probabilities of whether or not it's going to hold later in the video. We'll do a short-term analysis. Right now, we're just speaking purely from an objective standpoint. What would happen if this happens? What would happen if this happens? So if 21.5k is in fact lost, we're going to see a drop obviously below this local high. What will that mean? That would mean this was deviation. It was deviation, it was rejection, and again, it was a failed attempt to hold current support. That would result in the price action moving to retest our lower range of this historical trading volume range, and more importantly, this horizontal consolidation we had prior to this last leg up. That could potentially take us down to around mid 20,000. Now, this is the problem. If we start to lose this level here, we're going to see the momentum on the larger time frame start to significantly shift downwards. We already are starting to see the momentum on the larger time frame shift past positive into negative. As you can see, this blue line over here at that 0 point is only slightly positive still. It is only very slightly positive. We're sitting just above the positive range. If we drop any lower here, the larger time frame momentum is going to start flipping negative. Currently, the larger time frame momentum is still positive, but it is weakening positive momentum. If we do drop any lower, we're going to see it turn into negative momentum, and that can bring that price action down a lot lower than you probably anticipate. We could potentially see a continuation down to 19,200, which is going to be that major area of support. That is what I think is most likely. If we lose 21.5k, I do anticipate a continuation down for Bitcoin to around 19.2k. As you can see, like I said, momentum is falling on the daily. It is falling on the larger time frame. The 2-day you can see is falling. Even the 3-day is signifying momentum is topping out now and is starting to flip and lose strength on the larger time frame. That is never a good sign. So currently, Bitcoin does have a chance to bounce. Like I said, 21.5k is a major area of support. It's support until it is no longer support. And therefore, we do have to be optimistic at support, but we do have to be aware that although this support is strong, we are starting to build up some bearish momentum. Momentum is starting to flip negative now on the larger time frames. It's been negative on the short time frames for quite some time now. It is now starting to flip negative on the larger time frames, and that could signify a continuation through the support zone and potentially lower. Let's take a look at the short term. So here is a short-term chart. You can see Bitcoin has come down and basically retested this support level quite well. And you know, it's been nice to see that. Again, we did catch a little bit of a jump over here in price action, nothing too significant. In fact, we did say yesterday, guys, this downtrend is very much still active unless this downward trending resistance breaks. So this is our current downtrend. If this downward trending resistance breaks, we are still very much in a downtrend, meaning we can push upwards as high as like 22,500 again and come back down until we are out of this downtrend. And therefore, I wouldn't be jumping into too many longs right now. What I'd be doing right now is be waiting for jumps, be waiting for pushes upwards, and look for rejections, and I'd be taking more shorts. So be looking for shorts at this point. I did take some longs at 21.5k, but I've already scaled out of those just for the short-term price action. So, like I said already, guys, if we do lose 21.5k, you can see that our next horizontal support levels are going to be indicated by these red zones. Look at 22,800 to 22,600, 21,000, 20,100, and 19,500, as well as that 19,200 POC, which sits around over here. So we do have some laddered supports below us. But again, the next area of major support is going to be this area here. So this is major support. and this is major support. All the other supports in between are not as strong as these two. So if we do lose a major support level, we are technically under major resistance. We'll have that bearish momentum. We have the macro chart not looking very good. We would have dropped back below this log scale chart, indicating a deviation, and that could potentially send us back down to 19,200. So definitely keep an eye on that, guys. Let's go ahead and do a short-term technical analysis to discuss how the price action is looking at this level and what are the probabilities of a continuation downwards and upwards. So let's start on the hourly chart. Currently, we can see Bitcoin is underneath our 50 EMA, which again is signifying still we are in a downtrend. What we are seeing, however, on the 50 EMA and this smaller time frame reversals is we are starting to see something called a compression. We have expansion, okay? This is expansion. We have expansion, okay? Expansion, and now we have compression. Compression is when we have the price action increase in volatility in comparison to our moving averages. So when we see the price action increases distance from the 50 EMA to that price action, this is increasing volatility. When we see the price action get closer and closer to the 50 EMA, this is decreasing volatility. Generally, when the price action now flips over the 50 EMA, it signifies a shift in the trend, okay? So currently we are still in a downtrend on the hourly. This downtrend is not flipped. But if we do break above this 21,800, 21,900-ish range, we will flip the 50 EMA, and that will signify that at least on the hourly, at least on a smaller time frame, the trend is starting to flip. Now, as you would know, what happens on a smaller time frame and that is sustained on a smaller time frame eventually translates to a larger time frame. So although the daily momentum is starting to fall and is looking bad, if we start to see some rapid volatility on the small time frame pick up, some bullish momentum on the smaller time frame pick up, that could potentially eventually translate to the larger time frame, and then the larger time frame will shift more positive again. So looking at the smaller time frame for reversals is always going to be ideal. What we are looking at here, guys, is a potential pinch reversal going on over here with the 50 EMA. Again, if we do get rejected from this level, we can see a continuation back toward the downside. I don't see any major structural pattern occurring here. I really don't, even if I zoom out, I'm not really seeing anything from a structural stance developing on the chart as of current. So I don't think we're seeing any structural patterns play out currently, or at least currently being developed. So I do think right now is not the best time to be trading. The price action does seem a little bit more sporadic, and this is expected as we move closer and closer to CPI. What I'd be looking for right now is I'd be looking to trade horizontal ranges. So breaking above these local highs over here, 21,900, would result in a continuation upwards. Losing this lower level, 21,500, will result in a continuation downwards. And that is simply what I'm going to be doing right now. Moving on to the Gaussian channel. Let's take a look. So 4-hour Gaussian channel, again, it did signify we turned red quite some time ago. We turned red up over here. We did say that was going to result in a break toward the downside, which it did. So let's move to a larger time frame. The 6-hour Gaussian channel has just turned red. Again, if you know what that means, it signifies the trend is massively down. Now, however, generally when we see the Gaussian channel turn red on larger time frames, since it is a lagging indicator, it usually does signify at least some amount of the drop has already occurred. Now, moving on to the larger time frame, the 12-hour chart, we can see it is still green, and the Gaussian channel is acting as a temporary resistance, particularly on that midline. This is when it starts to add to these bearish signals. If we go look at the larger time frame, the 12-hour, the daily, they're starting to look worse and worse. It's starting to tell us a continuation downwards is more likely. So if I had to give a probable chance, I would say unless we are able to break past 21.9K, we're not going to see a swing upward. We're going to see a continuation downwards. Unless we are able to break above that downward trending hourly resistance, which is this downward trending resistance here, this black line, you can see it over here. I'm going to click on it. I do not expect any sort of continuation upwards, okay? That is a short term. For the macro, my stance is exactly the same. I do not expect any sort of continuation upwards in the macro until 24.3K and 25K is broken. Until then, we have got rejected from major resistance. We are now developing a larger time frame downtrend, right? We've already completed our small time downtrend. Our small time frame downtrend is already in action, okay? We are now slowing down. We are consolidating, we're compressing. Whether or not we get a short time frame bounce, that's another question. But the larger time frame is starting to look worse and worse. So we are in a downtrend. I do expect shorts to continue to do well. If we do continue down below 21,500, I will expect a continuation downwards. I do not expect anyone to be taking massive positions here. I personally will not be looking for positions here. With CPI just around the corner, the narrative of the market can massively shift. Okay, wait for CPI, see how the market reacts. Below 21.5k, new shorts. Currently holding current shorts above 24.3k. We're entering back for longs. Okay, guys, I'm gonna leave the video. If you've got any questions, leave them down below. You can join the Crypto Academy if you want to learn how to trade. If you want to learn how to analyze charts like I do, go ahead and sign up to the Crypto Academy. All the information will be provided. You can actually find the link to the website down below. We've got access to all of our information, how we trade charts, how we analyze charts, how we apply structural and technical analysis to charts, how we do risk management, and so much more. Go ahead and contact us for more information. We'll see you guys tomorrow. Cheers.